Winter is traditionally a quiet time when the housing market slows down. The number of property listings drop because, put simply, it's cold, so people aren't as interested in going to inspections. Lots of real estate agents, they also take holidays as well. So the market goes into a bit of hibernation until things really start to kick off again in spring. But this winter, things are a little bit different. The Reserve Bank's cut rates twice already. Auction clearance rates are actually pretty strong, and first home buyers are really looking for that dream home. Joining me now is REA Group Senior Economist Angus Moore. Angus, thanks for your time. Look, this winter we've already had 2 rate cuts. We could probably get one again next month in July. What sort of positivity does that do for the property sector?
Thanks for having me, Ed. Great to be here. Yeah, certainly it's a very different environment than what we were seeing last winter, when mortgage rates were very high, housing affordability was at record low levels. And now that we're starting to see rates falling, prices are growing in Sydney and Melbourne, which they weren't last year. We're probably looking at a more positive environment. And if we get further rate cuts, which we're certainly expecting to see, that's going to bolster consumer confidence, should be a tailwind for home prices. All of that's going to give vendors a little bit more confidence, and we should see some more supportive housing market conditions this winter than perhaps we did last year.
And if there are buyers that are looking for homes over this winter season, but just purely because there is usually less stock on the market, doesn't that in theory push up prices when they do go to auction?
Yeah, potentially that's the case. It is worth noting that winter tends to be a quieter period overall, both fewer buyers and fewer sellers. It's just a bit of a quieter period, though I wouldn't want to overstate how much quieter. To sort of put some numbers on it, on average, winter's about 1/6 quieter than what we see across the traditionally quite busy autumn selling season in terms of the number of auctions that go to market. So it is quieter, but it's not, we're not talking like December, January when the market completely stops.
Yeah.
That said, if we're looking at buyers coming into the market, we've seen some rate cuts, bit of increase in borrowing capacity. All of that is going to be a positive for home prices.
Yeah, because you think back to the previous few winters and we've basically seen rates either rising or rates on hold at the highest level in 12 years, and that's sort of kind of dampened demand a bit.
Yeah, exactly right. I can say on average, and economists love to talk about things on average, but every year is very different and the conditions really do make a big difference. I say autumn's often a busy period, as is spring, but you only need to go back to, say, 2020. Autumn then was dead quiet because we all went into lockdown for COVID. So, it's not as if every year follows this religiously. It really does depend a lot on what's happening in broader housing market conditions. And this year, with rates falling, probably does look a bit more positive than we've seen over the past few years.
And look, you just recently released your property price report for May, and prices seem to be increasing not just in the capital cities, but in regional areas across the country as well during winter.
Yeah, that's right. So we had the home price index for May out recently, and what that showed was that home prices nationally were up 0.4%. Certainly not world record growth by any means, but pretty solid. And notably, we're actually seeing pretty broad-based growth at the moment, which is quite different from what we've been seeing over the past few years, where we've been seeing really, really strong growth in places like Adelaide, Perth, Brisbane, but pretty sluggish growth in many other parts of the country. At the moment, it looks like the market broadly is just seeing pretty solid growth in most parts, and you'd have to probably think that falling interest rates is a big part of that story.
All right, well, look, this weekend there is a public holiday in some parts of Australia. Obviously, that dampens demand a little bit and reduces property listings. But what are you expecting over the next few weeks with properties coming to sale and going to auction?
Yeah, obviously public holidays always cool auction market activity. This weekend is going to be a quieter weekend as a result. But last weekend, the last weekend that we saw in autumn was actually quite strong, and it was stronger than what we saw to finish autumn last year. May overall was a quieter month for auctions, though this year than what we saw in 2024, though this year's been a little bit weird because of the quite late Easter and the fact that we had the election in May. So it's maybe a little bit hard to read momentum in terms of auction markets and volumes, but broadly speaking, autumn this year was a little bit slower than what we saw last year, but momentum looks reasonably solid. So we'd continue to expect pretty strong conditions in housing markets as we head into winter.
Yeah, and as more of those rate cuts start to come through, what are you expecting in regards to property price growth heading towards the end of 2025?
Yeah, rate cuts are really going to be the big story for housing markets this year, perhaps unsurprisingly. We're coming off a period where housing affordability has been at record low levels because of where mortgage rates have been sitting at, and that's obviously been a headwind for home prices. Now, we have still been seeing some home price growth despite that, But our expectation is that as we start to see interest rates fall, that affordability starts to improve a little bit, borrowing capacities increase, we will start to see a bit more home price growth. Again, we're not expecting to see really strong price growth by any means, given that affordability does still remain pretty challenging. But maybe starting to see some of that broad-based growth that we have been seeing this year continue through the rest of the year.
And the GDP figures this week really confirmed a weak economy in the first 3 months of this year, and that's sort of, you'd imagine, is going to encourage the RBA to potentially cut 2 or 3 more times.
Yeah, exactly right. The domestic economic conditions do look pretty favourable for further rate cuts at the moment. Inflation's back in the target band. It's expected to remain there. GDP growth remains pretty soft, which also points to the case for rate cuts.
Angus Moore from REA Group, thanks for coming on the show.
Pleasure. Thanks for having me, Ed.